From many economists. The Reserve Bank's Monetary Policy Committee has increased interest rates by 50 basis points to 8.25% earlier today. This comes amid persistent high consumer price inflation and a sluggish economy exacerbated by severe load shedding. But then again, how does this latest interest rate hike affect the ordinary South African who's already indebted? Here to discuss this further, we are now joined by Cosatu Parliamentary Coordinator Matthew Parks, Business Unity South Africa CEO Coovadia, and Thabo, the President of the General Industrial Workers Union of South Africa. You can be a part of the show tonight and you can weigh in that conversation. The rise in interest rate, is this as a result of the deregulation of the financial markets, or is it inefficiencies and failures to invest in the productive markets, productive sectors of South Africa? Or is it both? What are your thoughts tonight? 072-110-5584. We'll hear what our guests have to say about that. Gentlemen, good evening, and thank you very much for your time and for coming on tonight here on In Focus. And Thabo Mdluli, I've seen your statement, so I won't start with you, but I'll give you a chance to respond to what the two other gentlemen have to say around that particular question, because you seem to suggest, at least in part, that it is both, but largely the deregulation of the financial markets, pointing to the fact that we have weakened our exchange rates, which prevents large-scale outflows of capital. Kez, you also have an experience in the banking sector. Maybe you can help us here. Let's start with you. What is behind this latest interest rate hike?
Well, I think what the governor has essentially said is that conditions in South Africa remain poor. Inflation is still high. We've had load shedding, which is having a significant impact on the economy. Administered prices are high. And all of these factors lead to a decision by the MPC to actually increase interest rates by 0.5%. This has been the consistent sort of pattern in the sort of trend to raise interest rates in the last few Monetary Policy Committee meetings. And I think obviously, a rising of interest rates is not good for consumers. Already, people are bearing the brunt of no economic growth, bearing the brunt of our exchange rates being pretty poor, the rand-dollar exchange rate plummeting after the Russian issue that we've seen in the last couple of weeks, prices going up because inflation is up. And interest rates are not good for the ordinary consumer. But the Reserve Bank has a mandate, and that mandate is to control inflation. Now, one can have debates about the mandate of the Reserve Bank, but so long as that is its mandate, it has to control inflation. And one way to control inflation is to increase the interest rates. Yeah. And that's what they've done. They indicated that conditions are poor. Load shedding, high administered prices, poor growth, and all of those are not in the Reserve Bank's ambit. Yeah. It's not in the Reserve Bank's ambit to actually create growth and create jobs. Yeah. It's what Busa has been saying consistently, is that we need to address some of the fundamental issues in the economy so that we can actually create an environment for investment. And on the back of that, we can grow our economy in an inclusive way. And that's the way to address some of the reasons that the Reserve Bank has given to raise interest rates.
Yeah. Matthew, is it in the interest of everyone, including the financial sector itself, for the spending to slow down? Others are debating that actually the interest rate hikes are to the benefit of the financial sector, while others are saying, well, we all suffer, including the financial sector, in terms of defaults and so on and so forth, and people being unable to service their debt. Is it in the interest of all sectors, including the consumers, for the spending to slow down? And therefore, is the Reserve Bank using the correct tool?
Yeah. Look, thanks, and good evening. Look, it's a difficult one. We agree with the Reserve Bank we need to manage inflation because inflation devastates workers' salaries. Workers are always likely to receive an inflationary let alone inflation plus increase. And workers are struggling already to survive. Workers are drowning in debt. So we can't afford for inflation to get out of control, and it's at its highest in many, many years. And of course, the inflation rate that we'll see, the normal CPI rate, actually for workers is higher because most of the money is spent on food, electricity, on transport. And those often have much higher than the CPI rate themselves. But I think, look, for us, we don't think it's the right approach to managing the economic crisis. We understand the issue of managing inflation, but we cannot simply increase repo rates all the time. We're suffocating the economy. We're making it very difficult for businesses to pay workers, let alone to create jobs or even to save their jobs, to grow. We're making it very difficult for workers to feed their families. Workers are drowning in debt. We've seen in the last 18 months a 475 basis points increases almost every single month, quarter. So you can't manage this crisis solely through the repo rate. You've got to look at other measures. We appreciate the issue of the Reserve Bank only having one tool in the toolbox, so to speak, the repo rate. Government has to come to the party as well, because the cause of our inflation crisis is not domestic, it's external. It's the war in Ukraine, or ill-considered war. That's pushed up the international oil price, which is now fueling our petrol price hikes, the main cause of inflation. We think government should be looking at ways to ease the pressure of inflation upon consumers. Number one is to reduce the 28% of the fuel price that currently goes towards taxes. That's something that government did last year. That's a quick, immediate way of giving relief to workers, to travelers, to businesses, to the economy. We think it's affordable. Also, other issues to say to Eskom and to NERSA, we need to rethink these electricity tariff hikes. We simply can't afford an 18% tariff hike this year, a 12% tariff hike next year. And this is on the backdrop of double-digit tariff hikes in electricity price since 2006, year after year. So those are the two main things we can do to try to reduce inflation. That's going to move the need for the temptation for the Reserve Bank to constantly ramp up the repo rate. There is other measures that government can put to ease the pressure upon the poor, like increasing the SOD grant for inflation at least. It's quite shameful that it hasn't been increased for inflation since it came into being in 2020. We should be seeing how can we ramp up the employment programs to help getting more people into the labor market. We should be seeing how can we help address, as Cass is saying, the other obstacles to growing the economy, like the electricity crisis, the cable theft crisis, crippling transit and metro rail. We need to modernize the ports. These are kind of the longer term measures we need to look at to grow the economy, to create jobs. But right now, the kind of one pony trick we have right now, increasing the repo rate, is making things worse. It's not helping anybody.
Yeah. Thabo Mdluli, you've heard what business says. You've heard what your colleagues in Labour are saying. You of course, have got a different argument. So raise it for us. I mean, why do you believe that this blunt tool of interest rates to dampen demand is not the correct one to use?
Yes, I mean, as you have correctly pointed out, that it is like using a sledgehammer to kill a fly, but with it, you really, destroy the table on which the fly is resting, right? And that's because what this policy is calculated to do is to deliberately impose financial distress, insolvency, credit default, and basically also high levels of unemployment and poverty. Because the problem, which South African Reserve Bank and particularly its Monetary Policy Committee sees, is that you have in the economy at the present moment basically too much money chasing too few goods, right? And I think, as Cosatu has correctly pointed out, the problem in this economy is not too much demand. So when you use interest rate to suppress demand, you suppose that is a problem. But that's the reason that this inflation targeting policy have not worked. Despite having had, 9 consecutive increases, which had already pushed this interest rate increases by 425%, 425 basis points. Not only has inflation not come down, in fact, it has been accelerating from 7% in February to 7.1. And the reality is, it is ultimately an important inflation. But the reason also we have an important inflation is because domestically the economy has been on downward spiral. The productive and industrial capacity of society has been going down. You look at capital investment in key sectors of the economy. capital expenditure last year fell by 36.7%. And in that is not only business that is not investing in the productive sectors of the economy. It is actually government, it's actually state-owned enterprises that are leading away. The state enterprises have not invested in the economy, have not invested in the public infrastructure. In fact, their investment declined by 83% last year and 43% in the case of government departments. That means we are headed for a backlog in public infrastructure essential to underwriting the economy of 4.3 trillion, which the expert has been warning us about. That means the current situation of electricity blackouts, of potholes, of water outages is going to actually appear like a paradise compared to a misery and untold suffering and collapse of society.
But the Reserve Bank would say to you, but why would you put that on us? Those inefficiencies have got nothing to do with the Reserve Bank. Inefficiencies of fixing the roads, inefficiencies of investing in infrastructure and so on and so forth in the government. Government must do something about that.
Well, the reality is that the Reserve Bank is really part of the macroeconomic, architecture of this government, responsible for policy management, for monetary policy. The reality is that in the management of monetary policy, they are, in the final analysis, operationalizing the neoliberal macroeconomic policy of the ANC, which has collapsed the economy, which has collapsed the manufacturing sectors of the economy, and of course has plunged us in a situation where we are. The fact that they have to maintain a favorable capital, the fact that they have to increase interest rates tailing the US Federal Reserve, it is in a final analysis because they are forced to rely on the speculators, the swindlers in currency market, who, if we allow, if you like, the interest rates to fall behind those of the US, they would actually buy South African, they would actually, take the money here to the US, and that would result in a massive outflow of capital. So they have to always make sure that the interest rates are high compared to the US, and they're relying on a carry trade to ensure a favorable capital flow to maintain an otherwise widening trade imbalance and a trade deficit that South Africa has with the US and other major economies.
Okay, I'm going to come back to you. I want Kes to quickly jump in and respond to that, because I know we're going to be losing you now. Kes, what Labour is suggesting, one, we need to go back to exchange controls, something that the Reserve Governor spoke about earlier on, saying we've learned the hard way. We paid very expensive school fees on that in 1998, hence we have abandoned that. But two, they are also calling for price controls, a democratic working class control over the price formations. What would business say to that?
Oh, look, we can have a debate about the form of economic structure and economic system we want. The bottom line is that we have a free market economy. We have corporates and banks and other financial services providers that are globally connected and have to be globally competitive. We have relationships with economies in different parts of the world that are informed by a free market economy relationship. And we don't believe that introduction of exchange rates and price control are the way to go. What we need to do is ensure that we actually put into place the necessary instruments to grow our economy, to grow it competitively. And with a growing economy, we can create jobs. And with creation of jobs, we can address issues related to unemployment and poverty and inequality. We are absolutely clear that if we have the environment for investment and we are able to put our country onto an economic growth path, that economic growth path has got to be inclusive. It's got to include the majority of the people in this country. If we don't include the majority of the people in this country in the economy, it's not sustainable and we can't maintain an economic growth path. So that's the route we need to go. We are a very small economy compared to other economies in the globe. And we're not going to be able to determine the economic form in the globe. The bottom line is that the economic system in the globe is one of a capitalist free market economy. That's the economy, global economy we work in. And we've got to make that work for us. And the way to make it work for us is to ensure that we do what is necessary in our country to create the environment for us to actually grow our economy, which includes attracting investment, which includes ensuring that we have an appropriate regulatory environment for businesses to grow, including small and medium businesses. And in that way, we create a virtual circle of growth and prosperity instead of having a circle at the moment, a vicious circle where we actually just can't get to the bottom of how we deal with the issues we have.
Yeah. So business, last time we spoke, had made a decision that they will put up this private sector fund to assist government with load shedding. It will be controlled by them, but we'll be able to assist government in whatever projects and initiatives that they are trying to get to. Is government taking advantage of that? Is that helping us? There's a sense, even from the tone of the governor's address, that markets I don't believe that we can actually, for example, avoid a complete grid collapse.
Well, I think we have raised the money, and we have, through transparent RFP processes, been interviewing people, expertise to actually donate to the presidency. And that's pretty close to finalization, and we believe that we will be able to get those people into NECOM in the next 2 weeks or so. So that has happened, and those people will start going into NECOM and start implementing the president's plan, part of which is we're not going to get rid of load shedding for the next 2 years, but to stabilize the load shedding at lower levels. I think that if we begin to make progress on that, and if we start implementing those things quickly, we can begin to lift the pressure that Eskom has currently. We are also working with government to see if we can provide capacity to get power stations that need to be optimized, power stations that need to operate far more effectively than they are operating now. We are also working to work with government to put capacity in there to actually do that. So it's not just implementing the president's plan, but at a very practical level, providing the capacity to ensure that we get more electricity onto the grid. There's also a team working on the grid. Now, all of these things are happening. And I think that while we have a pretty bad situation in energy at the moment, I think what we need to be gratified about is that business and government are working very closely together to try and address this problem. And to keep on talking about that we might have a grid failure and so on, it's speculation at this point in time. Eskom, I believe it's doing its best to actually avoid that. And business is working closely with government to put in however we can put in jointly resources and capacity to avoid a grid collapse and to avoid a deterioration in our energy load shedding situation currently. And that's what we should be concentrating on, the fact that we are working together, the fact that we are beginning to make some progress, and that we will avoid actually worsening the situation.
Coovadia, appreciate your time. Thanks so much for coming on tonight. Breaking news this hour, we'll hear from the deputy, or actually it's the acting health minister, Dr. Thabo Mdluli, the deputy health minister, Dr. Sibongiseni